the things that we do in the scrolling party is go through the NewsWatch list, and some people have written to me and said, why do you concentrate so much on the news? And the whole idea is that if you're not trading from a good foundation, from something solid, then you can get slammed all around the place. And this is one of the reasons why we say don't place any orders right before news comes out. Don't place any orders before the New York or the London Open, because these times can be quite volatile and can impact your account dollars, not your profits, but your account.
Yeah, indeed. And we can take a very recent example. It was an example of yesterday, Friday. Can you show, Chris, for example, the pound CAD chart?
Okay, it's opened up on another window. Let me pull the screen across.
In the meantime, I will answer Kurt's question. Kurt, if you are in front of your screen, even during the ASEAN session, you can trade any movement. Don't forget the pound Kiwi is made with one Pacific currency, the Kiwi, and so you can trade during the ASEAN session. And so, if there are reasons for a trend to start, you can catch that trend without any problem. Now, can you draw a vertical line on the London Open and
sure.
Sorry, which the pound CAD?
Okay.
So now a vertical line at the London Open.
Okay. If I pull up the primer template.
Yeah.
I've got it here. Sim primer. Okay, let's try this one.
Okay.
Take that off.
Yeah, and
there's the London Open.
The London. Now draw a vertical line at 15:30 on your chart. So half an hour after the US Open. Yeah, a green line. It doesn't matter. No, a red line, because it was an important news release. It was an important news release on the CAD. It was a news on the GDP CAD, which is the domestic gross product, the gross domestic product. If you observe my bias, my max bias, the intraday max bias, starting with the London Open on the pound CAD, I was long. So you can see that starting with the London Open, there was a possibility for a long trade. Not a big one, but an interesting trade producing a little more than 1 hour profit. And after that, it was no longer worthwhile to trade because we were progressively entering into the lunchtime period and then facing the CAD news. And the CAD news, or the GDP, has been favorable for the CAD. And if you look in my Excel spreadsheet, I have stopped the bias just after the news because I had something else to do. But I have written a note, especially for the CAD. The CAD can now strengthen. The CAD strengthening, this means the pound CAD going short. And look what nice movement you could have taken after that news release. There was immediately, a few bars later, a nice remo, and you could have taken that nice downtrend until the end of the trend. And so, with a perfect exit, almost at the bottom of the movement. So,
this is Eusebio's pair bias spreadsheet.
Yeah.
Drop it down a little.
You can see that for the London Open, my pound CAD was long. I have stopped my session a few minutes after the CAD news. Yeah, after the CAD news, so I have had no time to update the entire worksheet because it takes me 20 minutes. But if you look in the notes below at the bottom of the page, I have made a special note. So the note number, here, the CAD, so the GDP was better than expected, so CAD can strengthen. And so this was a clear message that the CAD should be taken long, and so the pound CAD short. And this is why the news are so important. Because when you have such kind of opportunities, not always, not in 100% of the case, but in 80 to 90% of the case, you will be able to catch the nice movement following a news release in the direction of the news. So it was a movement with approximately 8 hour profit with the scaling technique. I think there was just one scaling which was available, the entry and scaling.
Okay, so from about here, just under the home base, you probably would have gotten out about, okay, there's a nice tiger pounce. So down to about here is 160 pips. So, okay.
Yeah.
So 160 pips of movement, and depends on what you could have gotten in with. Probably would have been out there. So let's pretend this. So about 40 pips for one unit, 150 for the next one. So there's 190 pips, and the second one.
The second one was earlier, Chris. It was earlier somewhere in this area, pretty soon after the entry.
Okay, yeah, because that's a long bar that.
Yeah.
Sure.
After that, we had only long bars, and so no possibility to make.
So a couple there, 260. So say around about 250 pips total.
Yeah, Edmund, you have always to consider that a pair is made of two currencies. Okay. And so in the case of the pound card, the pound was also at the same time weak for almost the entire day in almost all the pairs. At some moment, the market has completely reversed and the pound has become weak. So with a weak pound and a strong card, we have the ideal situation to trade short the pound card. On other pair containing the pound, for example, the card, for example, the euro card, it was less obvious because the euro was also strong. And so with a euro strong and a card strong, the two currencies are in opposition. So, and this cannot create a big movement. To have a big movement, we need always to have one weak currency and one strong currency. And the US dollar, if I remember correctly, was also rather strong. This is why the US dollar CAD probably has not moved a lot. So, and this is why the context is important, because the context helps you to understand if a currency is strengthening or weakening. And you have to do that analysis in the context for every currencies. And then you will have a good idea where the pair can, each pair can go. You're welcome, Edmund.
Okay, so let me re-undo the screen. What I've done is, these are very rough. There's about from an entry point down here somewhere, I'm not doing this exactly, up to here is around about 20 pips. So your stop would have been up here. So with a stop of 20 pips and making about 250 pips on the standard, you would have ended up with something like 6R. So that's just back of the envelope type stuff. I guess if you're doing it with something like SAM, which is even more advanced than standard, you could pull up 8 to 12R perhaps, Eusebio?
Or even double the result, because when I see such kind of movement, so here there was a lot of opportunity to make further scalings, which were not available for the max standard. So.
Okay. Okay, so that concludes the sales presentation.
It was the explanation why making the news is so important. So.
Okay, and cool, Edmund, good. And are you okay, Kurt, with the answer that you got? Start or near the huge movement on the pound. Okay, cool, Kurt. And let me see. So let's get the NewsWatch out of the road so we can get onto Eusebio's side of things. There are a few emails I might blast through, just depends on how long we've got. So I'll just make that a bit smaller and come over to the news. So, but before we get there, long-term aspects, Eusebio.
No, there is nothing to change in the long-term aspect. I see no new development around the world.
Okay, Syria, Turkey, and Russia, looking like they could have a good.
Yeah, but it's all the problem in Middle East. So, or perhaps one thing we should begin to observe now, it's the events before or the development about the campaign, the presidential campaign in USA, and see how the different candidates in the Democratic side and in the Republican side, it's easier in the Republican side or camp, will evolve. It seems that in the Democratic side, the liberals. So it seems to be a nightmare situation. So, but if the next president would be, for example, a liberal, a Democrat, so this could perhaps be better for the US dollar. So. So we have to keep an eye on what is happening. So until the end of the year, when we will see the election.
Okay. So what level of not critical, just important?
No, it's not a critical for the moment, but it will become important in the coming weeks. So
okay,
and in the coming months. So I would say medium term. Yeah, the U.S. election. U.S. presidential election.
I did type E.
Wrong place.
Too many people on the mouse, Eusebio. Okay, let me see. Let's just monitor it for the moment. And
yes.
Okay, that'll do for the moment. Nothing else. Let's just keep scrolling down. So Syria is just a festering sore. Yeah, Turkey is really sort of popping its head up in both of these at the moment.
Yeah.
Along with Russia. Especially now that Turkey, I haven't seen it much in US news, but Syria managed to kill something like 30 Turkish soldiers. So Turkey might go to war with Russia, which invokes the NATO agreement, which says that the US and the rest of the EU have to back up Turkey. So it could be the start of something nasty.
I don't think so, because Putin and Erdogan have begun to speak to each other, so I don't think so.
Yeah, I know. I was just saying could. I'm not saying.
Yeah, in fact, if there was an escalation, indeed, NATO will have to back up Turkey, because Turkey is part of, is in the NATO. So.
Even though it's the naughty boy.
Yeah, yeah.
Okay, so Libya, ECB still kicking on, Eusebio?
Yeah, indeed. Okay. We still have to learn to decrypt the speech of Lagarde whenever she talks, either in a press conference after an ECB decision, or on other important lecture she may give. So because she just started her term, so we have to learn how she's talking and how she presents, she explains things. So.
Okay. And I gather she's in your bad books because you're not calling her by her first name anymore. Okay. And
it means nothing. It means nothing when I call her Lagarde or Christine.
Okay.
No interpretation.
She'll be devastated. Okay. Okay. So nothing else there.
No, nothing else. No.
China and Hong Kong is still bubbling on, with China arresting people for stuff that they say has got nothing to do with the Hong Kong versus China issue, but they're still arresting them. Okay, so that's cool. I'll hide that. And what happens from here, and I'll save that, is I put this all up on our spreadsheet, and on our website, so that you can look at it each day. So if you have any questions about it, please ask. We're going through this a bit strangely today, but let's plow through the news, Eusebio. So
okay.
Here's Forex Factories
But after that, so for Edmund, historically speaking, global pandemic, other global pandemic have always had an impact in the economy of the concerned countries. So, and when there is a big impact in the country, the economy is impacted, and so the currency is impacted. So, but we are not yet at a very high level of impact in most of the countries, except for China. But we can see that in China, the economy is slowing down, so as an effect. And so we may have, if this extends further in many important countries like USA, like the European Union, and so on, so we will have an impact in the economy. Yeah, we will have an impact in the economy, different economies, and so in the currencies. So now, if each of the countries is impacted, so the difference of impact, the difference of the implication between the different countries will have a different impact in their corresponding currency. So we have to follow the situation. I cannot predict because we never know what may happen with an epidemic or a pandemic. So it can stop very quickly or it can develop further. It depends of so many factors, so it's really impossible to predict. So, with Italy, indeed, will we see an impact this week? I have no idea. But I follow closely the subject, and I follow closely the market to see any impact or to see any reaction of some responsible in the government, in the administrations, and so on, to try to evaluate what may happen. So.
Yeah, we've kind of stopped it here in Aussie and New Zealand, although China is having a big impact on us. Tourism and training, teaching students bring in a lot of money, like billions, and they've all stopped and dried up, and we're not letting people from China into New Zealand or Australia. I'm kind of interested in seeing what's going to happen in the US, seeing as the US flew a pile of people in with the virus and then had people helping them off, and those people have been infected and sort of spread around the country as well. So, didn't help themselves very well there.
And it's clear, Edmund, that the stock market always are more impacted than the currencies, because if you take the quote or the price, the value of a stock, so you can evaluate that value only based on factors directly related to the company. Sorry, who had that stock. So now concerning currency, the price of a currency pair depends always of the relationship between the two currencies. And so if the two currencies become weak, similarly weak or similarly strong, the price of the pair will not change a lot. If one country becomes stronger, or if the economy becomes better than another one, or if it weakens further than another one, so the price of the pair can change dramatically. And so it's really a more complex subject, a more complex problem for the currency than for the stock market, indeed. That's a good remark. And this is why we have seen this last week the stock market in USA being hit very hard. So, in fact, so on 2 successive days, we have seen, for example, the Dow dropping 1,000 points, which is a lot in one day. So, and we have seen that 2 successive days. So, the stock market will be hit harder, indeed.
And okay, go on about it for ages. But China does build a lot of bits and pieces for people, not just sort of like Apple iPhones, but components for them. And now that they've stopped or slowed down, people can't build their regular items, even though they may not be affected by the virus. So it could be really bad. Yeah. Anyway, let's carry on with the news.
Okay, let's go with the news. And so let's start with Sunday. Sunday, we have, let's see, it may be interesting to monitor the Kiwi Overseas Trade Index quarter over quarter, just to monitor it, just to see how the external economy of New Zealand will be affected.
It's been impacted already. Yep.
Oh, yeah, of course. I will monitor also the Aussie MI inflation gauge month over month, and the bias is to be defined. For the Kiwi trade index, so it will be bearish. Then we have the Chinese Caixin manufacturing PMI, so to monitor and bearish. You see a big difference now. 46 as a forecast against 51 for last month. And usually the forecast is pretty much similar to the previous months with the Chinese news.
Okay, for those of you not caught up with it, this pre-news bias being bearish is a difference between what previously came out last month and what's been forecast. So what came out last month was 51. What's forecast is less than that. And so that's why it's bearish here. Sometimes you've got to be careful about what the actual news is, because a forecast that's less if it's unemployment is a good result, would be bullish. So you've got to factor that piece in. This bias disappears as soon as the news comes out, and then you've got to refactor it. Could be the same or different or neutral. So just be aware of it. And you also have to factor in other news which might impact on China as well. So this is pretty messy. This is only giving you the bias for this particular news item. Okay, next day, Eusebio.
Okay, let's continue. So on Monday, what do we have? We have, let's see, the CAD manufacturing PMI, which is a major news, but to be defined. Then we have, I will monitor the US dollar ISM manufacturing PMI and neutral.
Yep.
Then we have the Aussie current account, major higher time frames and bearish. And then we have a big one in red, yeah, the cash rate and the rate statement. So for the cash rate, it will be neutral. And then monitor the yen 10-year bond auction for those of you who trade yen, the bonds. And
the ones that are marked in red. Sorry, Eusebio?
No, that's it for Monday.
Oh, okay. The ones that are marked in red are ones that Eusebio would stay awake for to trade. So because they're likely to produce a large movement.
Then on Tuesday we have the Swiss GDP quarter over quarter, major higher time frames and bearish. We have the pound construction PMI, major and a bit bullish. Then we have the Kiwi GDT price index, major higher time frames to be defined. Then we will have, we have Mester speaking at 2:50.
Oh, right.
From the Fed, due to speak about the economic outlook and monetary policy at the Society of Professional Economists annual dinner, or not important, in London. No, not important. Then we will have the Aussie GDP quarter over quarter, major higher time frame neutral, and the Caixin Services PMI for China, so to monitor and bearish. So this means that this can hit the Australian and New Zealand economy further. So on Wednesday we have, let's see, the Swiss CPI month over month, major higher time frames bullish. Then we will have the US dollar ADP non-farm employment change, major higher time frames and bearish. Then we have another big red one with the CAD, the red statement and the overnight rate. And for the overnight rate, it will be neutral. And then we have the US dollar ISM non-manufacturing PMI. I will monitor and pretty much neutral, a bit bearish. Then monitor the crude oil inventories for those of you who trade crude oil. Then we have Weidmann speaking. Yeah. Due to deliver a speech titled Capital Reception of the German Bundesbank, so not important. Then I will monitor the US dollar beige book. The beige book is a set of opinions by a large sample of people in the administrations about the US economy. Then we have the Aussie trade balance, so major higher time frames bearish, and monitor the Japanese 30-year bond auction. I will monitor the OPEC meetings to see if they will take some decision about cutting the production of crude oil. because if this is the case, this can perhaps has an impact for higher prices in the oil prices. Then monitor the Spanish and French 10-year bond auctions. Then we have Haldane speaking.
Oh, okay. Sorry, it jumps around sometimes.
Haldane, so due to speak at the Organization for Economic Cooperation and Development Conference in Paris. So it's an organization which counts for nothing, so let's forget that. Then we will have monitor the US dollar natural gas storage. Then we have Carney and Polos speaking.
Hey, Eusebio, this one here, revised non-farm productivity.
No, it's the productivity.
It's not the same as...
No, it's not the
same as the non-farm...
No.
Revision?
No.
Okay.
No.
Right. Sorry. Carney,
yeah. Due to speak at University College London, so let's forget. Polos. Due to deliver a speech titled Economic Progress Report at the Women in Capital Market event, let's forget.
Oh, okay. It's funny where you saw women.
Then,
yep.
No, it's simply a general lecture, so that it's not because of the organization, but yeah. So
right.
then we have Kaplan speaking also at 6:30 p.m. Due to speak at the Chicago Council on Global Affairs. Okay, let's forget it also.
Yeah. We've got a couple more down here. Kashkari.
No, before that we have the Aussie retail sale. It will be interesting to monitor the Aussie retail sale in the present context.
Okay.
So monitor and bullish. Strangely enough, it is bullish. And then Kashkari indeed, so panel discussion, so let's forget. Then Williams, to speak at the Foreign Policy Association dinner, no, let's forget.
Okay.
Then we have, I will monitor the Euro-German factory orders month over month, and bullish. Then we have the pound Halifax HPI month over month, major higher time frames. So no, sorry, major, and neutral. Then we have again the OPEC meetings to monitor, of course.
Okay.
And then we have two big ones, the CAD and the US dollar non-farm payroll. So for the CAD employment change, so to be defined, the trade balance to be defined, the unemployment rate to be defined, and then for the US dollar, so we have the average hourly earnings month over month neutral.
Hey, Hector.
The non-farm employment change bearish, and the unemployment rate bullish.
And this is what I meant by the bias being really hard to tell.
Yeah.
Okay.
And then we have the trade balance, so for the US dollar, so neutral.
Okay. And this, okay.
And then we have Williams speaking
ready
at 2 p.m. Panel discussion, so let's forget.
Okay, and that's it. I think there was no, it was just the pound. On the pound, I've labelled them with care, even though they're just a major. But be careful, because news coming up on the pound, because they're still sort of in Brexit exit phase, and trying to negotiate deals could cause issues. Like during Brexit, the pound would come out with some news and it would suddenly jump 40 to 80 pips. It's still a similar situation. It seems to have calmed down a bit, but maybe not. So I will also put all this up on the website so that you can look at it. In fact, while Eusebio is running through his presentation, the The idea with this is that anything that's marked with an H4 is for people trading timeframes from the H4, like the day and the H4 timeframes. If they're marked, then don't place any orders within 1 hour of the news coming out, and get out of them within half an hour of the news coming out, just to avoid any volatility. Anything marked major applies to all the other timeframes, so 5 minutes, 15 minutes, etc. Same rules. Don't place any orders 1 hour before. Get out within half an hour of them. And the pling majors in red are ones that are likely to cause a lot of movement. Non-farm payroll's been really quiet lately, but it used to cause huge amounts of movements, and some people would just trade the non-farm payroll when it came out, like once a month, and that was it. They would make all their money from it. These days it hardly causes a ripple, so we were even wondering about if we were going to do a session, or Eusebio was going to do a session this Friday. He is, but it's gotten that quiet that we're sort of wondering if it's worthwhile with our time, and maybe we can pick another pair to trade. Okay, I think that's about it. Gone through that side of the bias. The other thing to be aware of is that there are three major pairs: the US, the yen, and the euro. Thanks. And if there's any news coming up on these, then it doesn't matter what pair you're in. Treat the news on coming up on those three currencies as if it's coming up on those currencies that you're particularly trading, like the Aussie Kiwi or something like that, because news coming up on these, like the non-farm payroll, can cause spikes right throughout all the pairs. So treat it the same. Don't place any orders 1 hour before. Get out within half an hour. News on the smaller pairs like the Aussie, the Kiwi, the Swiss. What else is there?
The CAD.
The CAD. Yep. Then if you're in a pair that's got a currency that has news coming in on it, then treat it with the news. But if you're in one of the other pairs, like for instance, if there's news coming up on the Aussie and you're in the Swiss something pair or something that doesn't have the Aussie in it, then don't worry too much about the news on the Aussie, unless you're a Kiwi, because we're kind of cousins, and Aussie and Kiwi are quite sort of tied together. The only one of all of these, so we've got major pairs, major currencies like the US, the Euro, and the Yen, and they've got minor currencies, which are all the other ones, and the pound, which kind of straddles them. So pick your pair. If you think that the pound news coming up on the pound is going to be super important, then no matter what pair you're trading, treat it as if the news is coming up on that particular pair as well. And the way that you can find out a bit about how important it is if I come over here to see the pound. So here's that pound Halifax. If I click on this, the graph, I can see here what was, if I take that off, so the blue shows the actual and the orange shows what was forecast. And you can see that sometimes it forecasts stuff, and when it comes out it's a big surprise. Forecast and it's a big surprise, forecast and a big surprise. So you can kind of figure that whatever comes out on here is likely to cause a bit of a ripple, a bit strange. Anything over a 20% difference between what was forecast and what actually comes out is what we call a surprise, and can impact definitely on the pound, but could impact other pairs as well. So
pay attention. 20% is not a fixed rule. It may be more in order to have an impact in the market. So it's just a rule of thumb. So, but in general, it's the minimum deviation.
And it's not 20%, but it's a 20% change. Like 20% of 0.4% is
no, it's a percentage number. No. The rule is different when we have a percentage number, Chris. The 20% rule is valid when we have a normal number. But when we have a percentage, the deviation, the minimum deviation to have an impact is 0.2%.
Oh, okay.
Yeah.
Right, I'll add that to the list, 0.2.
Yeah.
Like I said, we keep changing a wee bit. So be aware of that. And there are places where you can go to find out called spike charts, so that you can go back in time and see if this came out at this particular time, what impact did it have on other pairs, so you can check it out. It's way outside our remit at the moment to try and do that. But at the bottom of the video email that I send out once this session is finished is a link to a spike chart. I'm not too sure if the link still works, but let me know if it doesn't. And yeah, good luck with that. Okay, the other thing that we look for are the best pairs to trade. And what we do is we get a list of all the 28 majors, and I'll just escape out of that. I'll just cancel that, sorry. Get the 28 majors from a place called Mataf, and then sort them by their dollar amount, not their pip range, but by their dollars, because some pips are worth more than others. Like, for instance, the pound CAD moved 129 pips and 960 bucks, but the pound dollar, whose pips are worth more, moved only 97, like almost a quarter less, or a third less than the CAD, but still managed to make more money than it in the daily range. So we sort by daily range. And wonders of wonders, even though the range hasn't changed that much, we're up to 10 over our 700, up to 11 over our 750 arbitrary cutoff mark. Lately we've been having to go down to the $600 area just to get 7 or 8 pairs that have worthwhile looking at. So we've looks like they're all beginning to move, not that much, but beginning to move. And if I pull this across, you can see starting from last year, this is 2019, the range was started out at 1,300 bucks for the top of the line, and then as Brexit wore on, it dropped down to about 800 bucks down there as a daily range. So here's July still carrying on. Daily range, it got a bit bigger as Brexit started waning, and then Brexit kicked in again and it got a bit smaller, and now we're post-Brexit, and it's only now starting to get a bit wider again, but we'll have to see how it goes. It's a trend is a friend until it ends. It looks like we're being friendly at the moment, but we'll have to see what happens. So we pick out the top pairs here. I've pulled out 11 just to be different, and what Eusebio is going to do is a magic trick where he takes those pairs.
Yes, so you have included, let me see, the Euro, Kiwi, and the Aussie yen. Okay, that's fine.
Yep.
Euro, Kiwi, and the Aussie yen. I'm updating my matrix,
okay.
News matrix.
And so this is a whole bunch of pairs that have been the best movers for the last 4 weeks. And so you can monitor all these if you want, but it's hard work. And so in order to not have you sort of jumping around so much, Eusebio will now do some magic and match up the pairs with the news coming out each day to get a smaller selection on a daily basis. And so we have these ones up here, which are the prime ones to look for. And then down here, if none of these are sort of moving that well, there's a backup pair. And if none of those work, then you've still got the whole, the remaining of the 11 that's listed. So let's do it, Eusebio.
Okay.
So on Sunday we have, we're looking for only majors. We have nothing on Sunday, but we've got the CAD on Monday.
Okay.
And that's it.
And that's it. So the first pair will be the pound CAD.
Yep.
Then the pound yen.
Yep.
And then the pound Kiwi or pound Aussie.
Okay. And because the markets finish at 5, we do a cutoff around the 5 p.m. point, and we start looking for the next days from that 5 p.m. on that the day before. So on Monday we have the Aussie.
The Aussie, okay.
And we on Tuesday itself we've got the Swiss.
The Swiss, okay.
The pound.
The pound. Okay.
And the Kiwi can come in at any time.
So we have to include it. So Kiwi and Kiwi. Okay. So we will have the pound Kiwi or pound Aussie.
Yep.
Then I would like to take the pound Swiss. Yeah, sorry, the pound Swiss would be the next one.
Okay.
And then the pound yen.
Do you believe horses are from... Can't say. Okay, on Tuesday we've got... so left over from Tuesday, we have the Kiwi, because we're not too sure when that kicks in.
The Kiwi, okay.
The Aussie again.
We have the Aussie, okay.
Where am I? And on Wednesday, yep, and the pound.
The pound,
Oh,
yeah.
no. Sorry,
no.
We're doing Wednesday. I was wrong. We've got the Swiss again.
The Swiss, okay.
And the US dollar.
And the US dollar, okay.
And the CAD.
The CAD, okay.
And that's it. After 5 p.m. is the Aussie, okay. So we'll come back.
So we will have the pound Kiwi or pound Aussie.
Yep.
Then I would like to take the pound Swiss or pound US dollar. And then the pound CAD.
Okay. And for Thursday, we have leftovers from Wednesday. So we've got leftover from Wednesday, we've got the Aussie again.
The Aussie, okay.
Okay, and no other majors on Thursday.
Okay. So it will be easier here. So we will have the pound Kiwi or pound Aussie.
Yep.
The Euro Kiwi or the Euro Aussie.
Oh, okay.
Yeah. And exceptionally, we will have the Aussie yen. It's a long time we have seen the Aussie yen. Aussie yen. Yeah.
Hey, Robert. And for Friday, we have leftovers from Thursday. Okay, nothing on Thursday. And on Friday, we have the CAD.
The pound, first of all.
Well, I was coming back to that, but yep, the pound, the CAD.
Pound, just a moment. So the pound, the CAD, okay.
And the US dollar.
The US dollar, okay. So we will have the pound US dollar or the pound CAD.
Okay.
Yeah, we have the two non-farm payroll, so it's important to consider two pair.
I was trying to see if I already had it written. Okay.
Then the pound yen.
Yep.
And then the pound Kiwi or pound Aussie.
Okay. So, like I said, your first is to watch these ones here. There's no particular order, but if you're, say, trading the US session, then you'd look at the pound CAD as opposed to the pound yen. If you're trading the Asian session, you'd be looking more at the pound yen because the yen is an Asian session currency. Yep. So you kind of pick the pairs to suit your particular session because that's the time that those currencies are going to be moving the most. Okay. If there are no other questions, we'll move off this. I'll just save this.